Hi guys, I'm Joanne. Today I will be sharing on 3 additional areas where Singapore has a tax advantage over other countries. Dividends. Singapore operates a one-tier corporate tax system. Companies are taxed on the profits made. Dividends, which are distribution of the profits made, are not taxable in the hands of shareholders. This is not the case in many countries. Different countries have different tax systems, as in the table. In America, for example United States, dividend is taxed at a rate from 10% to 35% depending on the income level. In United Kingdom, rates start from 0% to 36.1%. In Australia, dividend franking applies, and dividends are taxable at individual income tax rate. In China, dividend tax rate is at 20%. However, only 50% of the dividend received is taxable, therefore reducing tax rate to 10%. And finally, Singapore being free from dividend tax at 0%. Estate duty. Estate duty is a tax on the total market value of a person's assets, cash and non-cash, at the date of his or her death. Singapore is one of the many countries that have abolished estate duty. However, there are still countries with estate duty. Examples like in United States, inheritance tax rate starts from 0%, increasing up to 35%. For the first $10,000, it is free from tax, starting from 18% for the next $10,000, and increasing up to 35% for income above $500,000. In United Kingdom, it is free from tax for the first £325,000 and 40% on the rest of the value. In Japan, inheritance rate range from 10% to 50%. Australia, the same as Singapore, has no inheritance or estate duty tax. Capital gain. Capital gain is a profit that results in a disposal of assets. In Singapore, tax is only levied on income. Capital gains are not taxable. Here's a comparison on capital gain tax with other countries. In United States, capital gain tax range from 0% to 35%. In United Kingdom, tax rate is at 18% or 28% for higher taxpayers. 10% applies when claiming entrepreneur's relief. In Australia, gains are treated as taxable income. Individual tax rate starts from 0% up to 45%. In Japan, tax rate for now is 10% and set to be increased back to 20% in year 2014. And Singapore being free from capital gain tax will be at 0%. With no dividend tax, no estate duty tax, and no capital gain tax, Singapore has in effect only two types of taxes, which are the income tax and goods and services tax, both of which are competitively low. With our tax system, many investment companies have been set up in Singapore to take advantage of this. And on top of that, there are many available grants offered by the government. This makes Singapore a very attractive place to do business in and also to live in. At a later stage, we'll be sharing more on these grants. I hope our videos have been informative to you. If you require more information on Singapore tax or setting up a business in Singapore, please feel free to give us a call or drop us an email.